A litmus test for India's open network for digital commerce, ONDC goes live in parts of Bengaluru with more than 200 grocery stores and restaurants registering for the trials. The government-backed interoperable network is aimed at helping small retailers go online and reduce the dominance of Amazon, Flipkart and others. RBI stands firm on tokenization, refuses to move the deadline from tomorrow. All credit and debit card transactions made online will have to mask the identity of the cardholder via tokens. Amazon rolls out a live streaming video feature for promoting products in its shopping platform in India. The company has tied up with social media influencers to host live streams during which they can interact with customers and also offer limited period deals. TikTok rival Triller will receive an investment of up to $310 million from global emerging markets in conjunction with its pending initial public offering. The open source content platform privately submitted plans to go public to the SEC in June and will finalize its IPO plans with the closing of the deal with GEM. It expects it will complete the share offering before the end of this year. Meta will freeze hiring and further restructure amid an uncertain macroeconomic situation. Bloomberg News reported, quoting CEO Mark Zuckerberg's communication with employees, "I had hoped the economy would have more clearly stabilized by now, but from what we're seeing, it doesn't seem like it. So we want to plan somewhat conservatively," Zuckerberg told employees during a weekly question and answer session, the report added. On what's brewing today, early-stage investors Kalaari Capital and Omnivore recently held an event called Agritech Now and Beyond to chart a roadmap for the sunrise sector. On the sidelines of the event, my colleague Akil Vishwanath caught up with Vamshi, Krishna, Reddy of Kalaari Capital, Mark Kahn of Omnivore and their portfolio startups. Take a look.
Agritech is one of the most promising sunrise sectors in India, and why wouldn't it be? Over 1,500 startups are digitizing India's least digitized sector, which is agriculture. According to a Kalaari Capital report, Agritech could hit a market size of $24 billion in 4 years. Although the sector holds great potential, it is still in its infancy, with a penetration of about 1 to 2%. So what's the playbook to scale and supercharge growth? Now that's the question which is being addressed here at this event, Agritech Now and Beyond, which is being organized by Omnivore and Kalaari Capital.
There has been business models which have been tried over the past 5-6 years, which I think are actually showing signs of traction and showing proof that, the business can be built in this space in different verticals across the value chain. And I think that is leading to kind of the interest from growth stage investors or early stage capital which is coming into this.
But some of the larger players have had some challenges. It could be penetration which stands at 1.5 or 2% across the country. Then we have some troubles with scaling up and unit economics as well. What I wanted to understand is that what's going to be the playbook for some of the growth stage startups in India going forward?
I think, like you rightly said, I think fundamentally, the growth stage capital is actually looking, I think it's been very different from what it has happened last year. Now, most of the players are looking at, like what we were discussing about, not really about GNV, right? Can you build models which can actually sustain and enable that kind of margins of growth which is required? And I think fundamentally, a lot of the founders actually are focusing on that. So the capital that has been infused to the capital that has been utilized to form proper unit economics has not been established as such. We know it's just a matter of time when this sector kind of takes off, and we already are seeing signs that it is going in the right direction. Both are companies like Agnext and Agrim are doing extremely well, and the quality of the products basically. So I think the focus primarily still, I think, would be on building products rather than solutions immediately. So while there are people who are building full stack solutions across the board, I think we are very interested in founders who are trying to build products, right? So I think Agnext is one of the examples.
Since from 2016, we started working on using computer vision, spectral sciences, new-age technologies to totally digitize quality. The largest impact that we'll bring is, one, right pricing to the farmer, and the biggest is the trust to the buyer. Our technology primarily is deployed by large B2B players when they are purchasing from multiple sources, and it is deployed at a farm gate, at a warehouse or at a processor level. Today we are doing somewhere around 25 lakh tons of procurement on our platform, which I believe will be very shortly reaching somewhere around 1 crore tons overall. We just want to be judicious enough to scale with the right factors, which is most important for us is profitability. So I think in another few months we are turning profitable fully, EBITDA positive. So I think that's what we are all charged about. And I think our next rounds will happen based on, how well we are able to demonstrate that.
AgNext is among a host of startups such as Praman AI that are striving to weed out quality issues in India's $300 billion agri-value chain. Others are helping the farmer with better prices, higher yield, and affordable loans. Challenges of scale and profitability remain, but there is a bigger challenge to solve, and that's the challenge of climate change.
It's important for us to fight climate change because agriculture in India doesn't have a future unless we come up with solutions for both mitigation and adaptation for our agricultural sector. Omnix Bio is an initiative that we launched earlier this year in recognition that the agri-tech ecosystem in India is almost entirely focused on digital innovation. There is an absolute neglect of the life sciences. So we're really only solving half of the problem.
Omnix Bio has invested in BioPrime, which was the first investment, and very recently you invested in Loopworm. Can you take me through some of the startups that you're looking at and the themes that you're looking at for the year ahead?
Certainly. So Loopworm is a great example of that. Loopworm is an insect biotechnology startup. They are working on one side, turning the growing of insects into a smallholder activity akin to poultry or aquaculture, and then processing those insects, for example, black soldier flies, into fats and proteins and over time value-added products for a variety of sectors. So it's building something out of nothing. In terms of other themes that we're bullish on, we are massively bullish on animal nutrition and health. We're going to make an announcement in the animal nutrition and health space probably in a couple months. We are very, very bullish on, on any kind of biological innovation for crop inputs, and BioPrime is a wonderful example of that.
We are developing biologicals which are based on small biomolecules that modulate different processes in plants. We're also looking at microbes that modify different traits in plants by their association. So the idea of developing these biologicals is to give climate resilience to the crops, build good productivity, reduce the input cost, and thereby build profitability for different kinds of farmers. So we are basically reducing urea consumption by 10 to 15%. We are also reducing at least 1 or 2 applications of insecticide pesticides, which cost about 3,000 to 4,000 rupees per acre for the farmer. Till date, we've been able to contribute almost 20 crores in terms of farmer income, spread over 1 lakh farmers in Maharashtra, in UP, Jharkhand, and Bihar.
There are key 3 themes that are playing out in the agritech sector. Firstly, more and more investors are looking at emerging verticals, which garner 28% of the total funding in FY22, up from single digits last year, as per the Kalaari Capital's report. Secondly, agritech founders are aggressively looking to collaborate to build a robust agri-value chain. Lastly, growth stage startups are now under pressure to demonstrate profitability. With camera person Saroj Singh, Akhil Vishwanath for CNBC TV 18.
India is ranked 46th among the 132 economies on the Global Innovation Index 2021. Given the scope for potential growth through innovation-based economy, there is a need to strengthen STEM education to address some critical gaps. Now, the government is fostering a culture of creativity and innovative thinking among school children through its flagship scheme, Inspire. My colleague Aishwarya Anand brings you the story. Take a look.
In alignment with Government's Startup India program, the Department of Science and Technology and the National Innovation Foundation has been running its flagship scheme, the Inspire Awards Manak, which aims to nurture the ideas and innovations of school students and motivate them to pursue science and a career in research. In its latest edition, a total of 60 innovative ideas and innovations have been identified, recognized and rewarded to be extended into complete incubation to support these student entrepreneurs. 16-year-old Yash Shinde won the gold medal at the Inspire Awards. Among 6.53 lakh students from across the country who participated and presented their innovative ideas, Shinde stood out with his innovation of multi-purpose catering equipment.
मैं गाँव में रहता हूँ और गाँव में शादी का फंक्शन था, इसलिए मेरे घर के लोग ही गए थे और इनमें से केटरर्स को ही बुलाया था और इनमें से केटरर्स कोरोना पॉजिटिव था। तो मैंने ऐसा सोचा कि ऐसा कुछ करना चाहिए कि हम प्लेट को टचलेस तरीके से बांट भी सकते हैं और ये मशीन और केटरर्स को भी फुल हो सकता है। इस मशीन से हम टचलेस तरीके से प्लेट बांट सकते हैं और उनके साथ में बाउल भी बांट सकते हैं और खाने के बाद हम प्लेट कलेक्ट भी कर सकते हैं और खाने के बाद हम टेबल भी साफ कर सकते हैं। इनमें से कोई संक्रमण नहीं हो सकता है, इसलिए मैंने शिल्प बनाई है।
Bamboo baskets are a common utility item for the tribals of Arunachal Pradesh. 16-year-old Bengya Ama converted this bamboo basket, commonly known as Arra, into a multi-purpose contraption that can even carry a solar panel to help the locals recharge their phones. This innovation earned him the second spot at the Inspire Awards.
Remote area of the Arunachal Pradesh and Northeast, there is unavailable of electricity is there. And because of that only, their mobile get discharged. And sometimes the people may visit forest for a long time. To come out of this problem, we add the solar panel in it, so it can charge the mobile anytime, so they can contact their family member in any emergency case.
The third spot was grabbed by Ellen Birai from Salim in Tamil Nadu for her innovation called lift accident prevention.
Recently, many accidents occur during lift usage. So my experiment is, in this case, if it happens, for protecting the passengers, the lift that inside had a horizontal framework that will prevent the crack that happens in the drop, and the air balloons will come to prevent the passengers. Since the wall of the lift is made up of horizontal framework on all sides, it may cause severe injuries. This could prevent by the air balloons.
Under the Manak scheme, 1 million ideas are scouted from more than 5 lakh schools in the country. About 10% are shortlisted, provided with a financial support of Rs 10,000 for students to develop proof of concept and prototypes.
Vipin, take us through the Manak program. Tell us what it entails.
60 will be incubated completely. Now the designers and engineers will work on those technologies, and we will try to convert it into the product, so that these could be the technologies of tomorrow. So that is the Manak program. It is an end-to-end program, not just getting ideas and giving them the award, but the hand-holding, converting them into the, the start companies. And we hope that tomorrow lots of, technologies will come out which would go to the masses.
Can you also tell me what kind of representation you saw from, kids coming from tier 3 and tier 4 towns?
In this program, the students were there from all the states and union territories. You have seen some students from Lakshadweep, from Mizoram, from Manipur, from every state, and the far-flung areas of, Arunachal Pradesh. In fact, some were there from the China border. 75% students were there from the remote areas.
Each year, over 50,000 students from recognized schools across India receive the Inspire Awards. The scheme has brought in inclusivity by representing innovations and ideas from 702 districts in India. What's interesting is that 51% of the entries are from girls and 84% are from schools in rural areas and the backward regions. According to the latest numbers, 71% of the representation came in from schools that are run by the state and the union territory governments. With camera person Balbir Singh and Nitin Trivedi, Aishwarya Anand for CNBC TV 18.
On that note, it is time for us to head into a short break. But coming up on the other side, we bring you a sneak peek into Wakefit's Furniture Factory, which is India's largest furniture factory. Stay tuned for that and more. Welcome back. After a slew of new age company IPOs led to wealth destruction on Dalal Street, market regulator SEBI has tightened the disclosure norm for IPOs. SEBI Chairperson Madhabi is speaking live. Let's cut across to him.
Of placement of equity, and what is it that is the price at the time of the IPO. So, to reiterate, what is the purpose and thinking behind this disclosure requirement is really to give investors a better basis to make their decisions on whether the price is right for them or not, and also to share what is it that has been, there should be no information asymmetry. So whatever it is that has been shared with the QIBs, it's what should be shared with the retail investors. But of course, with one important caveat, which is that, as you know, in our offer documents, we don't permit any forward-looking statements. So, therefore, the emphasis is on disclosure of the past, and then, the investor really makes what we believe is an informed decision. The third is in terms of an amendment to mutual fund regulations. This is more procedural, really meant to ensure that when you and I redeem our mutual funds, we get the money as soon as possible. The old regulations were drafted at a time when checks had to be issued and all that, so obviously that is very anachronistic today. The payment systems in the country are so fantastic today that there is absolutely no need for any delay or any time requirement for making sure that the investor gets his redemption money and his dividend as soon as possible. So that is what has been done. The next one is in terms of net settlement of cash and F&O. Perhaps I think people who operate in the stock market will rejoice at this. The implications are quite significant. In terms of earlier, as you know, it was a sequential settlement which required the investor to bring in separately his commitments for each transaction. So in the cash equity segment, he has to bring in the money separately, and for the F&O, he had to bring in money separately, and the two were not netted. So this we found was not really required from a risk management perspective, and therefore any entities who are permitted to, which are not mandatorily required to take physical delivery of shares, all such entities, which of course covers all the retail investors, will be permitted to do net settlement. And this would make the entire process much more efficient, and the amount of fund flow, the cash that an investor will have to bring in to settle his trades can come down very significantly depending on his positions. The next one is about pre-filing of an offer document. This is also very much a liberalization and a flexibility being given to the market. It is not mandatory. It is an option. You can continue to follow the IPO document filing process the way it is today. But if you feel that you're not quite sure that you actually want to go ahead with an IPO, also in terms of market timing, you're not quite sure when you may want to come with the IPO, you can do a confidential filing. This is what it is referred to in other jurisdictions. You can do a confidential filing. So the market knows that an application has been made, but the document itself, the detailed document, is not in public domain. It is confidentially filed with the exchanges and SEBI. So that period when SEBI and the exchanges are examining the document before giving observations, it is held confidential. After SEBI has fully examined and given its observations, at that time, depending on when the issuer wishes to actually launch his IPO, he can then file the document and make it public. So this takes care of two things. To our minds, it's a good proposal because it addresses two wonderful things. One is it gives flexibility to the issuer that if there is confidential information in his document, it does not become public until he is sure that he actually wants to go for an IPO. And secondly, from the investor's perspective, the document that is then available for 21 days has at least the first set of SEBI observations already incorporated in it, which today actually is only a 5-day period, because initially 21 days, then 5 days with SEBI observations. So now the market will have that benefit as well. So net, we felt it was a win-win for everybody, and it's, as I said, optional. So it's up to the offerers, the issuers, what is it that they would like to do. The next one is in terms of appointment and removal of independent directors. Again, this is a liberalization initiative. It gives flexibility to the companies. You can follow the current regulation. You also have an option. The current regulation says special resolution. But if you don't want that and you want a majority of minority, we are perfectly happy with that as well, because it gives even more power in the hands of public shareholders. So this option is now going to be available both for appointment and removal of the independent directors. Separately for reappointment, there are some other constraints. We are working on those constraints, but right now, at least for the first stage, this is optional, facility given. So it's also in the nature of a liberalization. The next one is in relation to real estate REITs. This is also liberalization. So you're going to hear a lot of liberalization. I think I had mentioned in one of my interactions that in SEBI we have created within every policy cell at least one and often up to 3 people whose only KRAs for the year are developmental and liberalization activities. So I think you're starting to see the first manifestation of the structural change within SEBI. So a lot of focus is being given on we need to do things which are developmental, which are give flexibility to the markets and empower the markets much more. So the REIT regulations are being changed so that the minimum holding by sponsors now is required to be less, reduced from 25% to 15%. This is in line with InvITs and a progressive step in that sense. The next one is in terms of InvITs, where there was a separate regulatory framework for unlisted private InvITs. This henceforth will now be discontinued. The purpose behind this is that since we are essentially a disclosure-driven regime, this particular regulation did not have the facilitation for public disclosure in many ways. So it was perhaps not appropriate, and therefore, going forward, this separate framework for private unlisted InvITs will not be there anymore. So you will either have a public listed or a private list. And as I said, to reiterate, the purpose is to ensure that disclosures are there for all kinds of InvITs. The next one is on AIF regulations. And this is really to bring a certain amount of certainty into when an AIF scheme will mature. So currently the way that the regulations are, the private placement memorandum says that the scheme will be for a period of, let's say, 5 years, 7 years, 10 years from final close. But there's no certainty on final close. So the thought was that it needs to be defined from first close. You can then define whatever you like. As you know, SEBI regulation puts no bar. There is no bar on the tenure that is there for the AIF. They can say 5 years, they can say 10 years. Extensions, of course, are limited by another 2 years. But the important thing is there must be certainty for an investor when he puts his money in. He should know when to expect his money back, which under the current regulation was not facilitated. It could have become anything. So the objective is to bring certainty into that. And also there was a requirement to bring in some changes in terms of our regulation when there is a change in manager or sponsor, because that is quite a significant change in the AIF, because if a scheme is managed by a new entity as a manager or a sponsor, then it's a very significant change and would require SEBI approval and also some additional requirements. The offer for sale, this is another liberalization measure. Here, what it is that non-promoter shareholders, even though they may have 25 crores and above of shares that they want to offer for sale, there was a restriction that unless that constituted at least 10% of the share capital, they couldn't come under this window. So it was highly restrictive. So we have now removed that 10% altogether. We are saying it is not relevant.
Well, that's the SEBI's chairperson talking about new regulations. But with that, it's a wrap on this edition of Startup Street. But more news and updates continue on the other side. Stay tuned.